Hey everyone, and welcome back to another episode of Financial Market Insights for Traders, the podcast where we dive into the minds of market movers, investing legends, and everyday traders turning knowledge into wealth. I'm your host, Sophia, and today's episode is something special. We're going deep into the mind of Warren Buffett, yes, the Warren Buffett, to understand what sets him apart and how you, even as a beginner, can apply his mindset today. We'll also hear from top investors and platform leaders who break down his strategies into actionable insights. If you're looking for investing success stories, buckle up because this one's packed. From newspaper boy to investing icon. Let's start at the beginning. Warren Buffett bought his first stock at age 11. Yeah, while most kids were just figuring out multiplication tables, he was learning about capital gains. By his teen years, he was already filing taxes, selling gum and soda door to door, running pinball machines in barbershops, and yes, making money. But Buffett didn't become the Oracle of Omaha on hustle alone. His big leap came from the influence of Benjamin Graham, author of The Intelligent Investor. Graham taught him the art of value investing, buying great companies at great prices, then holding them. Buffett took those ideas, simplified them, and scaled them. His legendary portfolio includes names like Coca-Cola, American Express, Geico, and Apple. But what makes Buffett remarkable isn't just the profits. It's the philosophy: don't just buy stocks. Own businesses. Warren Buffett's core investing principles. Now, if you've ever Googled how I made money investing, you'll probably end up reading something related to Buffett. And it's no accident. The man's entire life is a masterclass in rational, long-term wealth building. Here are 6 of his most powerful principles. Number 1, by what you understand, Buffett avoids businesses he can't grasp. That's why he dodged the dot-com crash. His rule: if you can't explain how a company makes money in one sentence, you probably shouldn't own it. Number 2, margin of safety. This means buying a stock for less than it's worth. Buffett's mentor Graham drilled this into him. A smart investor leaves room for error. This principle protects you when the market doesn't behave the way you hoped. Number 3, patience pays. Buffett says his favorite holding period is forever. While others flip stocks for quick wins, Buffett lets his winners compound over time. That long-term mindset? It's a competitive edge. Number 4, stay calm during volatility. That you've probably heard this quote. Be fearful when others are greedy, and greedy when others are fearful. In downturns, Buffett sees opportunity. He famously bought big during the 2008 crisis when panic was everywhere. Number 5, invest in people. Buffett doesn't just buy businesses, he backs leaders. He values integrity and clarity. From Tim Cook at Apple to his lifelong partner Charlie Munger, Buffett surrounds himself with smart, ethical decision makers. And number 6, live below your means. Yes, even with billions, Buffett still lives in the same house he bought in 1958. That kind of discipline is a wealth strategy in itself. Expert voices decode Buffett's strategy. To explore these principles in action, I invited some standout voices to join our investor interview series right here on Financial Market Insights for Traders. First up, Barbara Friedberg, former portfolio manager and personal finance expert. We chatted about women in investing and why Buffett's style, slow, rational, and data-driven, is often a natural fit for female investors. She pointed to studies showing that women, who trade less and stay disciplined longer, often outperform men. Sound familiar? Then, Kunal Desai, the high-energy founder of Bulls on Wall Street. He opened up about how he transitioned from a day-trading adrenaline junkie to a value-driven investor. He credits Buffett with reshaping his entire mindset. As he put it, when I applied Buffett's mindset, I became a better trader by trading less. And finally, the CTO of crystalballmarkets.com joined us. This is a guy running one of the most user-friendly trading platforms out there. He explained how Buffett's principles directly inspired their tools, focusing on long-term value, not just short-term signals. What would you advise a newbie? So naturally, I had to ask them, what would you say to someone brand new to investing? Here's the consensus. Start small, but start now. Compounding doesn't work if you never begin. Avoid hype. If Buffett wouldn't touch it, Ask yourself why you are. Use great tools. We recommend crystalballmarkets.com. Seriously, their platform is intuitive, packed with smart features, and helps you build strategy instead of guesswork. Never stop learning. That's why we created Crystal Ball Markets podcast. Tune in and learn from traders who've been in the trenches. Keep a journal. Buffett thinks clearly because he writes. Do the same. Track what you buy, why you bought it, and what happens next. Buffett's take on today's market. Let's talk about today. How does Buffett navigate this modern, chaotic market? Well, during the pandemic crash, he pulled back. That surprised some people. But then he went all in on railroads, energy, and logistics in 2023 and 2024. Stuff others thought was boring. Why? Because boring is often profitable. Buffett's not chasing crypto or meme stocks. He watches the headlines, but he doesn't trade the headlines. That alone is a lesson for us all. Here on Financial Market Insights for Traders, we remind you, you don't have to be in every trade. Sometimes, sitting in cash is the smartest move you can make. And that's pure Buffett. Real-life trading experiences from listeners. So how does this mindset translate to everyday investors? We hear from you all the time, and your stories are powerful. Emily, 29, Malaysia. I started buying dividend stocks and holding them. For the first time, I felt like I wasn't just gambling. Jordan, 34, Brazil. After years of day trading losses, I moved to a Buffett-style portfolio. I'm up 23% in a year and I sleep better. Sophia, 42, Colombia. I didn't think investing was for me until I heard a woman explain Buffett's approach on your show. Now I teach my daughter, too. Devin, 39, South Africa. Using crystal ball markets helped me automate parts of my research. Now I invest lower but smarter. These aren't just feel-good stories. They're proof that mindset beats momentum every time. Buffett, algorithms, and the modern investor. Now let's address something controversial. Is Buffett's style outdated in an age of AI and algorithmic trading? Some critics say yes. But here's my take, and the take of most experts we've spoken to. Principles don't expire. Tactics do. Buffett might not write Python code, but his investment philosophy is more relevant than ever. And when paired with modern tools, it's a game changer. That's exactly what crystalballmarkets.com is doing, giving you tools that blend algorithmic insights with long-term fundamentals. And if you want to keep sharpening your edge, plug into the Crystal Ball Markets podcast. It's packed with real-life trading experiences, insights from professional investors, and mindset tools you can use today. Conclusion, learning from legends. Warren Buffett might not ever join a trader interview podcast, but let's be honest, he's here in spirit. His strategy is timeless. Method over emotion, fundamentals over hype, people over price. And here at Financial Market Insights for Traders, we're on a mission to help you connect the dots between theory and action, between analysis and wealth. So if this episode resonated, do me a favor, hit that follow button. Subscribe to the Crystal Ball Markets podcast for more real-world investing conversations. And check out crystalballmarkets.com if you're ready to level up your trading game with smarter tools. Warren Buffett didn't start as a billionaire. He started by thinking differently. And that mindset? You can start using it today. Thanks for listening. I'm Sophia, and I'll catch you in the next episode.